Let's talk now about Astral. Okay, so this one is interesting insofar as also a major player in the poultry industry in this country with its own brands, major operations in chicken production, individually quick frozen pieces, etc., etc. It also, though, has a substantial business in the animal feed industry. The brand you will have seen there on the highways and byways is Meadow Feeds. So there effectively what you're doing is you're growing or buying in grains and adding value to them, adding all sorts of additives and other things, and then supplying them to not only the chicken industry but also the general livestock industry. Headquartered in Pretoria and unbundled, interestingly, from Tiger Brands in 2001. Chris Skitter runs the company though, and it has done well. This is one of the companies, as Gerbrand was saying earlier, that looked very beaten down a couple of years ago but rebounded quite sharply. 7.4 billion rands worth of market cap, price earnings ratio 11.69, dividend yield 4.72. Yeah, so let's have a look at the share chart, because this is the move a lot of people didn't see. Down there in 2014, people were hating on them. They'd done so badly below 90 rand, and then suddenly, boom, right up to above 180.
Maybe it just shows you that stuff gets cheap and stuff gets expensive. So it was 80 rand a share, nothing were going right in the specific sector, and a few things changed, and these guys are making double the margin or 3 times the margin. What I like about Astral is it's a bit more less volatile than some of its peers, because it's diversified as well into the milling and the feeds business. So it got about 65 chicken business and 35 meadow feed business.
Okay.
So that bodes well for them on that front. So they can absorb some of the costs from time to time, or they make more money on that front and make less at the chickens or whatever. But they do have outside customers as well, so they're actually making decent margins always on the feed business. Okay. But the chicken one is volatile, as we know.
I just want to understand something about the chicken. So what they got was like specific anti-dumping stuff to try and prevent the Brazilians from bringing a lot of cheap chicken, because the Brazilians are such a big industry. They take the stuff they don't like and they move it here. Then they started, they being the chicken importers, taking it via Europe, because there was like a special free trade agreement. Then, I don't know, they put tariffs up against that too. Now you're telling me that the Americans are going to be like potentially creating a new channel in. But to be fair, is it not the case that you can't have a business which is perennially uncompetitive and protected only by tariffs from the government? Your business margins can't depend on the Department of Trade and Industry, surely.
No, certainly. I think you need to be competitive on a global scale, and these guys are not at the moment, or they weren't. I think at the currency at the moment, they probably should be.
And I
remember having a discussion with Chris Skitter 3 years back,
Yeah.
And he said, you know, they need more than R8.50 a share to be competitive, and we're standing at 13. So hopefully, that was 2 or 3 years back.
Rand to dollar exchange
to the dollar exchange rate for them to be competitive with the imports. So they should be competitive with the imports at the moment. These guys are growing revenue by about 20%. They're growing their profits by about 100% at the moment. So all is going well here, but that's the only concern for me. You had soya falling 17%. These Astral and Rainbow are certainly the big boys in this industry. They do in a week what the other guys do in about a month. So if we look at Sovereign, I think it's a fair comparison to say these guys do in a week what those guys do in a month. So certainly the big boys in the industry.
Okay, but looking at that share chart, after that big kick higher and all the excitement and everybody getting rich together, there's now been a bit of a plateau and a sideways move in 2015. It's been a difficult market. So what do you think about them now? Are you going to go hot or not?
No, I think the time to have bought these was 2 years back. So it's a bit difficult to go with volatile variables to say hot after it's done more than 100% in share price. So from a valuation point of view, we're a bit scared of just the chicken producers themselves.
Okay, good. I'm going to go with not hot as well. That seems like a well-argued case.